Hello guys, welcome to LMC trading course. Hope you all doing great. In this video I'm going to discuss breaker blocks. So what is a breaker block? These are generally the order blocks which are effective when there is a shift in direction of the trend. That means the breaker blocks are effective when you see a general shift in trend. That is when you see there is a shift in direction from bullish to bearish or from bearish to bullish. So when there is an uptrend, the demand order block generally play its role. But when there is a change of character towards the downside, what happens is that the demand order block fails and it changes to supply order block. And same is the case for a shift in direction towards the upside. So when the price comes down in a bearish market, suddenly what happens that the supply order block fails and next it changes to demand order block when there is a change of character towards upside. So when this supply order block changes to demand order block, it is called breaker block. And now I'm going to explain you through diagrams. So when there is a when there is a bearish market like this, the price comes down. The sell orders get activated from this supply zone up here, from the supply order block, creating break of structure to the downside, breaking this low up here. And what happens next is that the price comes up again to this supply order block. The price again breaks this low, causing break of structure towards the downside. The price comes up, breaks this low, and what happens next is that it suddenly breaks this high, causing change of character. And what happens next is that the price comes down to this order block up here, which was previously a supply zone and later changed to a demand zone, and then the price shoots up again. So what are the order blocks up here? The price comes down, comes back up to this supply order block up here, shoots down, again comes back up to this order block up here. Again the price comes down, causing break of structure to the downside, comes back to this order block up here. And what happens next is that the price comes up, but the supply order block fails and it causes change of character towards the upside. And next what happens is that the price comes back to this order block and then moves up again. So when this supply order block fails and it changes to a demand order block, we call this a breaker block. Same is the shift in direction towards the downside. What happens is that the price moves up and get buy orders from this demand zone, moves up, comes back to this demand zone, moves up, comes back to this demand zone. And what happens next is that the price shoots down, causing change of character towards the downside, and the price shoots up again to this order block up here, which was a demand order block previously and later got converted into a supply order block, and the price shoots down again, coming to this order block and then shoots down again. So you could see here that there is a demand order block up here. The price comes back to this demand zone, then shoots up, causing break of structure to the upside, again comes back to this order block up here, again comes back to this order block up here, again comes back to this order block up here. But what happens next is that the demand order block fails and later got converted into a supply order block and the price shoots down again. So when this demand order block gets converted to a supply order blocks, it is a breaker block. Same is the case for supply order block getting converted into a demand order block. And now there are two important confluences which you should keep in mind while trading the breaker blocks, that is imbalance and fib levels. So now I'm going to make you understand the confluences up here. Now I'm going to make you understand the confluences, and these are very important confluences while trading the breaker block. First I'm going to make you understand this supply order block changing into a demand order block. What happens is that the price comes back, shoots down, comes back up, shoots down, and what happens next is that there is a change of direction to the upside and comes back to this breaker block up here and then shoots up again. So there is a supply zone up here which got mitigated. There is a supply zone up here which later changed into a demand zone. When will you consider these valid order blocks? Whenever you see that the price comes down and the order block fails and moves up, and when you see that there is imbalance up here but there is negligible imbalance down here, you consider this as a valid breaker block and you trade these breaker blocks. And whenever you see that this breaker block matches with the fib levels, the fib levels that you traded SMC, you consider those breaker blocks as valid. That is when you see imbalances up here and very less or negligible imbalance down here, you consider this as a valid order block, as I have told you. And whenever you see that this move to the upside matches with our fib levels, you consider this as a valid breaker block. And now I'm going to show you when there is a shift in direction towards the downside. So when you see that the price is moving up, comes back to this demand zone, moves up, comes back to this demand zone, moves up, comes back to this demand zone, moves up, but it did not come back to this demand zone up here. There is unmitigated demand zone. But what happens next is that the price shoots down rapidly towards the downside, causing change of character. And then the price shoots up again to this order block, which later got converted into a breaker block, and then the price shoots down again. So you see that this demand zone got mitigated, this demand zone got mitigated here, this demand zone got mitigated here, up here. So this is a valid uptrending market, that is a bullish market. But you see that these order block up here is an unmitigated order block. The price came back but did not mitigate this order block, and it caused change of character, breaking this structure towards the downside, causing bearish structure, causing a general bearish structure. So you see that the market creates a proper low and a proper high, but what happens next is that the market shoots down, breaking this structure, simultaneous break structure to the downside, causing it a bearish market. So whenever you see that there is imbalance, huge amount of imbalance down here, and very less or negligible amount of imbalance up here, you consider this order block as a valid supply breaker block. And what you see next is that when you draw these fib levels, you see that this order block matches with your 70%. That is when your order block matches with your premium fib levels up here. You consider this order block as a valid order block, and you trade from this breaker block. So what you do next is that you take your short position down here from this breaker block, putting your stop loss above it and targeting this level. So this is how you trade breaker block. And now I'm going to show you from live examples how you actually trade the breaker block strategy. So now coming on to examples. Here you can see I'm opening this Reliance chart that the market has gone up, create this low, again created this low, and then moved up again, created this low. But what happened next is that there is a shift in direction to the downside, causing a breakout structure here. What happened next is that the price moved, shot up again, and then moved down again. Here you could see that there is a order block, valid demand order block here, but it did not got mitigated. And what happens next? It created this high, but it shot. So here you could see that there is an order block, but I'm going to show you that why I would not take this order block. There is imbalances down here. It created this low, but this low did not retrace back to this demand order block. So this will act as a liquidity, that is inducement. And what happened next is that the price shot up and got down again. You could see that still there is imbalance up here. Yes, there is imbalance down here, but there is huge amount of imbalances up here. So there is a chance that the price is going to retrace back up to this order block, fill this imbalance, and then shot down again. And this order block doesn't match with my fib levels too, you could see. So this is not my valid order block. Yes, there are a few who will trade this, but this is a very risky order block that you will trade. So when the price shot down like this, you place your limits here, putting a stop loss above this level, and maybe targeting this low. See what happened next. The price retraced back, might hit your stop loss if you did not take stop loss above. And you might target this demand zone up here, but this is not a good trade because it is just 1:1.95, that is 1:2. So this is not an ideal breaker block trade. As a trader, you see that there is an order block up here which is left to be filled, and there is imbalance, huge amount of imbalances down here. You wait for the price to retrace back to this order block and then shoot down again. And what are these? These are liquidities. So you see that the price retraced back to this order block, shot down. And what happened next? And it shot up again. So as it shot down, creating lower lows and lower highs, you could easily identify that it creates huge amount of liquidities down here. So you wait for the price to retrace back up to this order block and then shut down again, because you see a clean order block up here. There is imbalance to be filled. You wait for the trade to come back and then shut down again. But what happened next is that this order block fails and the price rapidly shot up. So as you see that the price shot up, there is imbalance up here and very less amount of imbalances down here, very less, you could see. So what you do next is that you target this order block and you consider this as a valid breaker block. So what you do next is that you place your limits here, putting your stop loss below this order block, and you could see imbalances up here and there is a valid supply order block. So what you do is that you mark this as a valid order block, place your limits here and target this. And as you see that this trade matches with all my criteria, because firstly there is imbalance, huge amount of imbalance up here which is to be filled. There is a proper low and a proper high, and what you see next is that from this low to this high the order block matches with the 70% level, and the trade is a good 1:5.5 risk reward ratio trade. So it is very probable that you take this trade and you win. Coming on to the next example, that is persistent system. What you see that the price comes down, comes up, comes down, comes up, comes down, comes up to this supply zone, moves down, comes up, moves down, and what happens next is that it causes change of character towards the upside. So what you see that it breaks this major low, confirming that yes, this is a valid bearish market. What happens next is that the price moves up, comes down, moves up, again comes down, and what happens next is that it causes this major break of structure to this upside and it invalidates the bearish market, changing it to a bullish market. So as a trader, you see that there is a valid supply zone up here. So place your trades, putting stop loss above this level and targeting this level. But what happened next is that it shot up. And as a trader, after you see that there is a consolidation up here and there is a valid low down here and the price shot up, creating imbalances up here. So you take this order block as a valid breaker block. You place your limits here, take your trades and targeting this level. So what you see that there is imbalance here, and still huge amount of imbalances up here. So you target this imbalance because you know that these imbalances will be filled. And what you see next is that from this low to this high, the price matches with the fib, that the price matches with the 70% fib level. So this is a valid trade and you take the trade. So you place a long position here, placing a stop loss below this and targeting this high. So it's a valid trade because it is a 3.8, nearly 1:4 risk reward ratio trade. But here you trade the gun box tool and you trade the gun box. This is the order block I'm targeting, and you could clearly see that there is imbalance, huge amount of imbalance here and imbalance here, and you know that this imbalance will be getting filled, and there is imbalance here too. The price retraced back, but it did not fill these imbalances. You could see that there are many of my trades where I use the gun box. You could use this gun box when there is imbalance to be filled and you know that the price is going to retrace back to fill this imbalance, or when you see that the order block is very huge, you could take this gun box trade. And when I see that this imbalance will be getting filled, what I do is that I take my partial positions here you may say 30-40% of my position, because it is a 1:3.5. or if I take very aggressive entry, it is 1:3.6 or 1:3.8 as I showed. But when I know that these imbalances will be filled, I take major positions here. And I see that this is 1:3.8 risk-reward ratio trade. And these are the techniques which you use when you trade breaker blocks. So this is the end of the session. Now moving on to the next session.